Why did the markets bounce back so much? There were no trade agreements of any importance being made because people don't want to be left out of a rally, so they jump back in. I was trying to double down on the dip, and I tried to share that as much as possible. In this video, I will let you know how companies are operating during tariffs and what you can expect over the next 6 to 8 months for the economy and the stock market. When the tariffs kicked in April, boats that were on the water are a done deal. They will be received and the tariffs are going to be paid, but I guarantee you most companies told the ships to sail as slow as possible in case things changed on the tariffs, which they did. So if the diaper supplier at Target has $1 billion budget to buy diapers, and those same diapers that they sold last year are now costing 145% more, will later change to 30%, after the change, then they're going to reduce their purchase orders by roughly that same amount, as the tariffs will allow them to. The point is that companies won't order as much products as they sold in the past because their budgeting power is now cut down by whatever that tariff rate is set by the governments. So when the Chinese tariffs hit 145%, US companies pulled back or canceled half or maybe even majority of their orders from China. In turn, China closes down a ton of their production plants, and this is much worse than you can possibly think. Because Chinese workers don't simply go unemployed and go home to their apartments to play video games. No, they often move back to their hometowns where their families live. And the reason that's a problem is that if they do resolve all the tariffs tomorrow, well, the plants in China, they won't be able to flip a switch and make product right away. It would easily take them about a month, maybe more, just to get all the workers to come back into work. There's another storm coming as a result of all these tariffs and the steps that retailers and manufacturers were forced to take. All of that news that's surfacing from retailers saying, hey, 3 of our shelves might be empty later in the year. Well, they already know that to be true because they already know that they've cut back on a lot of their purchase orders. Let's be honest with ourselves. Yes, the cost of products are going to be going up, and it's going to be shown in the CPI data. That's going to be coming up in July and definitely in August. There's simply no way around it. If retailers are bringing in less product, then they won't be hiring all those seasonal workers. That means the jobs report will probably take a major dip in the latter half of the year. The fourth quarter will be brutal for consumers, for retailers, and of course for brands, because there will probably be a major shortage on products. Not that you could afford it. The overall point of this video is to just be prepared for the second half of this storm to hit because it's inevitable.